I know many people, many of us, we think about taxes only at the end of the year. That is not the right way. Otherwise, if you are expecting a better result, you should do some changes. If you don't do the changes, again, every year, March and April, you have a lot of pain in paying taxes. Rather be proactive, work with the right person, and you are not expected to know everything. Even I don't know everything about the real estate. So we need to work as a team. Your success depends on with whom you work. It's a very, very important. So you need to identify the right people to work with you, who can think for you, who can help you, to grow.
Because the management and transparency is what's very important. So once you submit a referral, you're going to have your own Home Advantage account, and it's going to tell you where everything sits. So if you have 10 referrals that you've sent into the network, it's going to give you all 10 referrals. It's going to tell you every milestone that client is sitting in, whether they're touring homes, whether they're in escrow. And you now can manage through the Home Advantage application as far as what your pipeline looks like for the referrals that you've sent. And so it's pretty sophisticated, and it's all click of a button, guys.
So if you are looking to save on taxes as a real estate agent or a real estate investor, either or, this is your guy. So we are here with Anil, and he actually owns his own company. He is a tax planner. My name is Tara Carter. I am your LabCoatAgents moderator. I'm also a real estate agent in sunny South Florida, specifically Fort Lauderdale and Miami. And I am excited because I have a million questions for him. So will you please introduce yourself and tell him how long you've been in the business, where you live currently, and why you love helping people with their taxes?
Excellent. Hi, Tara. Very good afternoon. Yep. My name is Anil Grandhi. I am the CEO for AZ FinTax and Grandhi FinTax CPAs INC. We are a team of finance professionals, CPAs, and chartered accountants. And we are experts on tax planning and tax planning and CFO services. I am based out of Seattle, and I was working for Amazon full time. I quit Amazon a few years back and I started my practice. Even though I'm based out of Seattle, we have licenses to do the business through every state of America. And I am also the Forbes Finance Council member. And last year, I was awarded as a top 20 CEOs of America for the small and medium-sized companies.
That's awesome. Congratulations.
Thank you.
So clearly, I don't know if you follow a DISC profile, but the DISC profile, essentially, I'm a high I and a D. The S and C in me is usually around numbers that fascinate me. I don't want to say overwhelm, because overwhelm is negative. They fascinate me. Like what you do and how you do what you do, I don't know. So what would you say is one of the most common mistakes that you see that realtors make when it comes to planning for their taxes?
So yes, I am a numbers guy. And when we work with a lot of real estate agents, I notice they don't claim all expenses, what they are eligible, what they can actually, but because they don't have enough knowledge, or many real estate agents work as a part-time. They may be working full-time somewhere. So they are very conservative on claiming the deductions or expenses. So if you don't claim your expenses as deductions, then you are ending up with paying more taxes. So definitely legally, IRS has listed down so many expenses. Legally, if any expenses are relevant for the business, you should be able to claim it. So when you claim it, your total taxable income will go down and your tax liability will go down. Yeah.
So how do we know what type of expenses that we should be making sure that we claim when it comes to being a real estate agent?
I have a few lists which I go through with my clients. The first and very most important, commissions pay. We pay a lot of commissions back to other agents or maybe sometimes even to our employees also. So, but we don't claim those expenses. So definitely that is the one area which I want to tell. Commissions paid, whatever commissions you are paying, don't think much. Yes, if you pay something, it is a business expense, and you should be able to claim your expenses. The next one is home office. You may not have a proper outside of office, but you have been using your house to work, to talk to your clients, to talk with your other agents, to talk to their other service providers. So as long as you are using a dedicated place in your house for your business purpose, and you should be able to claim your home office expenses. So generally, this is based on percentage of space you are using in your house. If you can claim this expense, you can claim a lot of your home maintenance expenses, some share. Like example, maybe rent or mortgage interest or maintenance, pest control, or maybe insurance or HOA expenses. Any of those expenses can be claimed as an expenses. And any desk fees. The third one I want to talk about, the desk fee, as you need to pay to your franchise owner, or when you are working working with an independent broker, they do charge for your licenses some desk fees. Those are also tax deductible. And education and training. We all spend so much of money on subscribing to a lot of training sessions, or maybe attending a lot of education series. As long as they are relevant to your business, and even you want to do some small education, some course, maybe a short-term course, maybe 3 months course, 6 months course, which can help you to build your business, definitely that is also a tax deductible expense. And marketing and advertisement expenses. So we do spend a lot of marketing. We advertise our posts, our listings, we advertise on a lot of platforms. So definitely those expenses, any of those marketing expenses are tax deductible. And also auto expenses. As you need to meet your clients or to show the listings, you travel a lot, so you commute a lot. All those expenses can be claimed. You have two options here. Option number one, standard expenses. It is a mileage expenses. So for every mile you travel, around 60 cents for every mile you should be able to claim. You do also have a second option, actual expenses. That means you are running a car, you have a car, you may be paying a monthly installments, monthly EMI for your car, or there may be some fuel expenses, maintenance expenses, insurance expenses, or maybe repairs. All those expenses can be claimed. On top, depreciation also. If you are buying any vehicle which is more than 6,000 pounds, it's a wonder. Like example, if you are using a Range Rover, which is around $100,000, 80% of the value of the car can be claimed in the same year when you buy. Even you might have bought the vehicle with a zero down payment, but still you can claim 80% of the value, that is $80,000 in the same year.
Wow.
So, yeah, this is a really big expense. Last year it was 100%, but this year it is 80%. Next year it is going to be 60%. So if you have not yet filed tax returns for the last year, ensure you are claiming. If you bought any vehicle last year, definitely ensure that you are enjoying this Section 179 deduction 100% of the value of the car if the vehicle is more than 6,000 pounds. And you do also claim some other expenses like office supplies and equipment. You might incur a lot of expenses for maybe printing or any supplies. Those expenses also can be claimed. And your meals expenses, whenever you go out on travel, all your expenses, 100% of your expenses, if it's a business related travel, those are claimed as a tax deductible expenses. And if you are going out to meet a client, vendor, supplier, or service provider, and if you are incurring any of those meals expenses, those expenses also tax deductible. Then you also incur, as an agent, we do also incur a lot of fees for licenses, membership, and also our insurances. We do also pay E&O, errors and omissions insurance. All these expenses are tax deductible, including our professional membership fees or MLS fees are also tax deductible. And software and businesses. So we do also incur some expenses, maybe Office 365 license expenses, or it may be buying a laptop or a monitor or any of these office equipment related expenses or software tools, then all those expenses are also tax deductible. And health insurance, we work so hard, and we do also incur health insurance expenses. As you know, if you are an independent self-employed real estate agent, you may be paying $1,000, $1,500, $2,000 as a health insurance policy, health insurance premium for your whole family is tax deductible. So, yep. So these all are very high, at a very high level. These are the expenses you are eligible when you are a real estate agent.
So one of the questions Paige has, and then I want to jump on the home office and office supplies. So Paige had asked, can the car be a used car if purchased new to me? Was the price anything over $6,000? I don't know. Do you understand that question, or do we want clarity?
Yes, no, I'm good. Even it is a used car, still you should be able to claim 100%, or this year it is 80% if the vehicle is more than 6,000 pounds. There is a big list of vehicles listed which has more than 6,000 pounds, such as maybe Honda Odyssey or BMW X5 or X7, Tesla X or Range Rover. There are a big list is available. You can, whenever you're buying a vehicle, just look for GVW or gross vehicle weight ratio. It should be more than 6,000 pounds. Boom. That helps you to save a lot of money.
Awesome. Thank you. I appreciate that. Paige, let us know if that answered your question. So I have a question in regards to the home office, which, yes, I'm sitting on the floor because I'm super comfortable. If you look behind me where my lovely kitty is, yes, there is a wall unit that is a standing desk.
Yes.
I live in a one-bedroom condo, so that was my creative way of having a standing desk in my office. Could I essentially still claim that as a home office, even though it doesn't matter how big the size is in your home?
Absolutely correct. Yes, you need to have a dedicated place that you cannot, if you are sitting on your couch and you say that this couch is my home office, that is not allowed, because we use the couch even to watch movies or have fun with our friends and families whenever they come. But if you can demonstrate a dedicated place, like your standing stand is, or the stand is good enough, you need to just take one picture. That's it. It doesn't matter how big, but you need to demonstrate how much space you are using in your house. Like if you are living in a house, maybe 800 square feet house, and if you are using maybe around 80 or 100 square feet as a home office, maybe whenever your guests are coming up, you may have some place to sit, or you are parking your car in your garage. That these all are business related. Instead of taking an office outside, you are using your home as home office, and list down all your expenses for your home rent, HOA, maintenance, or pest control, or HOA, or any other electricity, gas, everything divided by with a proportionate percentage, maybe 10%, 15%, 20%.
Awesome. I hope that gives some clarity to some others. And then how about when it comes to client, actually, I would like to talk about first the travel. When we're traveling for conferences and whatnot, is it important that we are keeping records of our taxes or receipts and whatnot? Like, what would be the best suggestion that we should be doing when we're traveling for work?
Very good question, Tara. So in general, as per IRS, as long as you need to maintain the receipts for every transaction you spend, every transaction you spend money. It can be even to go to the restaurant, or it may be flight tickets, or it may be attending a conference. You need to have a receipt and a proof that it is a genuine. And sometimes IRS allows even the bank payment transaction, which you can see it in your bank statement. But we strongly recommend you to maintain the receipts for every expense. If it is less than $75, it is okay. If it's more, if it's okay if you have a bank transaction proof. If it is more than $75, definitely I want you to take a picture from your mobile phone of the receipt. Just soft copy is enough. And when you go to attend a conference, if you are traveling, all your expenses from the place from your home to go to the airport, if you are using a cab or Uber, that from there, entire expenses again till you reach your home back, all expenses are 100% tax deductible, including a coffee at Starbucks at airport. Everything is tax deductible.
Awesome. And then what about in regards to client gifts?
Very good question. So as per IRS regulations, the gift value cannot exceed $25. So anything you can, there is no limitation. You can give clients to gifts to, you can give gifts to clients or prospects or anyone who is helping you for your business. But as per IRS regulations, still they are following 1980 guidelines. They're saying $25. But we are hoping that $25, the number is going to change. But as of today, it is only $25 is allowed.
Okay, so $25. And our logo should obviously be in it. If anybody has any other questions, if you want to put that in the chat, that would be awesome. What is the difference between a tax planner and a CPA?
Excellent.
Is there a difference?
Very good. No, there is a big difference. So a CPA or a tax accountant, they take your numbers, they plug it into a template. Tax return is a template which we have been using for the last so many decades. A template and we have advanced tools available. What a regular an accountant or CPA, they take your numbers, plug in the numbers into the return. There won't be any suggestions or advices they give. So it's a data entry job. But tax planner or tax strategist, I am a tax planner. So what we do is we understand your requirements. We spend some decent size of time and we look into all your details. We understand what are your future goals. Then we design our strategies. We identify the strategies. Like if you look into all successful business owners, what they do is for every one of us, it is for you, Tara, or for me, or for any of us, all our listeners, the biggest expense we have every month or every year is taxes. 30-40% we pay as a taxes. It is much bigger than our house EMI. It is much bigger than our house rent, or bigger than our annual vacation expenses. So what successful business owners they do, they focus on the taxes. They work on how to reduce our tax liability. So as a tax planner, I have so many real estate agents and investors as my clients. I help them. We understand and we identify the strategies. We work with them throughout the year. Every quarter, we meet our clients. Come on, we understand what they are doing. Are they implementing all the recommended strategies or not? We make them accountable so that at the end of the year, we file the tax returns and we show the difference, how we bring the value. So
the tax planner is essentially the same thing as what we would call a tax strategist.
Yes, you are right. Yeah.
Okay, because I think that people misunderstand that, like, yeah, there's a CPA, but then there's also a tax strategist that could actually help you come up with strategies in order to save on your taxes. Yes. Is the cost essentially the same, or does your company offer both services, CPA and tax strategist?
Yes, its cost is definitely different because CPA is like a data entry. Maximum we spend maybe 30 minutes or 45 minutes to prepare a tax return, around an hour if it's a big return. But tax planning, we spend a couple of weeks to understand, to analyze. We personally go through more than 1,500 tax planning strategies. One identify, is this applicable to Tara or not? Is this applicable or not? We identify with a lot of strategies. So definitely there is a difference. And we do offer both the services. And we do also take care of the bookkeeping. If you want us to maintain the books of accounts, we do that. Or at the end of the year, we prepare your financial statements based on your bank transactions. Then we file your taxes.
Awesome. So for the bookkeeping fee, do you guys charge the same fee for everybody, or is it just kind of a flat fee based on per accounts you have?
Okay, so it depends on the size of the business. For if it's just a thing, if your income is less than a couple of hundreds of thousands of dollars per annum as a real estate agent, you don't need a month-on-month bookkeeping. I believe at the end of the year, we can just prepare your financials. We charge a flat fee of $750 for the year to prepare the financial statements and everything. So,
okay, awesome. Good to know. And then if anybody else has any other questions, please put that in the chat as well. And then where do you see that majority of real estate agents also make the mistake of not including their kids in some of things such as having them as tax deductions or on their payroll or things like that?
Yes, there are. Yes, this is one of the examples. There are many more tax planning strategies are there. Today, whatever I discussed, those are like a movie trailer. So, but when we go through in detail, one-on-one, because we need to consider the state applicable rules also. We have a labor laws for every state. So we need to evaluate what is the local labor law is saying about hiring kids. So, but definitely hiring kids is one of the great strategy. We can make them involved into our business. So actually, apart from tax savings, I personally love because we are training them, we are teaching them, we are coaching them what is the value of the money, how to get the work done and earn the money not instead of getting it for free. And if our kids are more than 18 years old, all their expenses can be taken care by if we can give some pay to them, which is an expense for them, which is an expense in our business, but for them, they can claim a lot of expenses against that income. And if your kids are making less than $13,000, they don't need to pay any taxes at all. It's completely tax-free if the income is less than $13,000, if they're getting a W-2 from the business. But there are different scenarios we need to evaluate based on where the client is located, what are the local state laws are there, what is the age of the kids, how they can contribute. We go through all these items on one-on-one and we evaluate. So a lot of times what happens, many real estate agents, they do a Google search and they implement the strategies, but they do a lot of wrong. They do mistakes. Then they ended up paying a lot of penalties and interest after receiving the notices from the IRS. Rather doing those mistakes, my recommendation, just let's focus on working with the right professional who can help you, who can stand for you if any issues also comes up. And to avoid any issues, let's work with the right professional rather than doing on self.
Awesome. Thank you for that. And then when it comes to a real estate agent filing for their business, I hear this one all the time. Should I be an LLC? Should I be an S corp? Should I be sole proprietary? Like, which one is, or is it just an individual? It's not like a one size fits all. What would be your response to that?
Excellent. So first of all, to do the business or to be a real estate agent, you don't need to have any LLC set up. As a sole proprietor, you can use your SSN number to start getting the money as an agent commission, and you can file your taxes. But if you have an LLC will help you only on the liability protection. Having an LLC will not help you to save money just by having an LLC, but it will definitely help you on liability protection. So, and the next category is that is a sole proprietor or LLC, both are in the same bracket. There are no additional tax advantages you have. But when you have an S corporation, definitely there are some advantages. If you have an S corporation, you don't need to pay social security taxes and Medicare taxes, which is coming around 15.3% savings on your S corporation. But S corporation is not for everyone. Again, we need to consider different parameters. Your net profit from your business after claiming all these expenses should be at least $50,000. Otherwise, it is not worth of going to the S corporation. So, like example, if you are making some maybe $100,000, $200,000 as a real estate agent, definitely you should have an S corporation. And what I noticed when in general, many real estate agents, they start their career as an agent when they're working for somewhere as a part-time. When they start as a sole proprietor. And even though they might have grown over the period, but still they maintain their business as a sole proprietor. In that case, they are losing 15.3%. They are overpaying taxes to IRS. So that is what we do in tax planning. When we work with our client, we work on different dimensions. One, what are the expenses they are claiming, deductions. Number two, legal entity setup, entity structuring. What is the right way? Even we do also have a C corporation also. So when do we need to choose C corporation? When do we need to choose S corporation? Or LLC is required or not? Then also latest tax updates. And also there are a lot of loopholes also there. If you look into the Donald Trump, he's a multi-billionaire, but he pays almost zero taxes. But he's because of real estate. Real estate is a golden mine. There are a lot of things can be done because of the real estate. And if you go to my web page, Facebook page, AZ FinTax page, you do also see a lot of videos, recordings, or seminars, webinars we do exclusively for the real estate agents and real estate investors. I'm specialized for that area, and many of my clients, even they make millions, they pay almost zero taxes because of the real estate investments. So, yep.
That's good to know. I have learned so much lately about all of the ways that, the rich have saved on paying taxes. And, growing up, I didn't have anybody to talk to me about those things. I didn't have nobody in my family or my circle was telling me about ways to save taxes. They just said you had to pay every year. It wasn't like, let's find the loopholes in the gray areas. So I understand how these guys have not been paying taxes. And I'm learning so much, a lot. And so I guess let's say that the person was actually making more than 50,000 and it made sense for them to be able to be an S Corp or whatnot. But they already filed for last year. Could they go back and recast their taxes and fix it from earlier?
Okay, answer is no. Unfortunately, it is no. So, but at least you should do it from now onwards, from this year onwards. And if you have not yet filed for the last year, then answer is yes. You can go to the 3 years back if you have not filed. But once you file your tax returns, the doors are closed. So, but otherwise, there is a concept called late election. There is a separate forms we need to submit, but it can be done.
Okay, understood. And then I guess so they can go back if it wasn't filed, but they just can't do it if it's already been filed.
You are right. Correct. Okay. Yep, you are right.
Good to know. And then what mistakes do you find that investors make? Is it because they're not taking advantage of the investments that they own, or are they not filing them correctly? Like what mistakes do you see that real estate investors are making?
Okay. So this is we are experts on the real estate. So we have a lot of real estate investors for whom we file taxes. And I notice a lot, they don't claim a lot of expenses. They may have a real estate rental properties, but they don't claim a lot of expenses except maybe mortgage payments. That's all they do. But interestingly, apart from mortgage payments, you can also claim a lot of other expenses also. So I can give some examples what they miss, like auto and travel. They can also go and visit their home here and there. All those expenses are claimed. And if they have multiple homes, I do also encourage them to claim home office expenses as well. To manage their home, there may be change in the tenants, or there may be some repairs, maintenance. This person the owner is supposed to manage the property. So then home office expenses, auto and travel. Even if you have multiple properties, definitely the owner is supposed to go and visit the places frequently to ensure that the property is properly being managed. All those travel expenses are claimed. It can be claimed. And computer, tools, supplies, as we discussed for the real estate agents, so they can also claim those expenses, because to collect the rents, to manage the expenses, I need a computer, I need the tools, my telephone expenses, internet expenses, and HOA expenses for maintaining that property, or utilities, and also outside labor. You can hire your kids to manage the property. If there are small repairs are there, or maybe to do gardening work for your investment property, you can hire your kids and you can pay some money to them. And that is completely tax deductible for you, and it is a tax free for them. So these are the things. And you have multiple properties. If you have more than 5 properties, there are wonders can be done through the tax planning. That is what the Donald Trump does. So Donald Trump, even they make millions. Not only Donald Trump, Grant Cardone, all these are expert. They make millions to billions, but they don't pay taxes because of investment strategies. If you are a big real estate investors, definitely you should contact. I'm happy to go through your scenario. You can see my contact details here on my my background. Yeah, definitely, I'm happy to help you and guide you and recommending the strategies.
You are a wealth of knowledge. And I know this subject is not sexy for people by any means, but then they freak out when they haven't paid their taxes and they have so much to pay. And then we're like, So if anybody is listening, he is so kind to be offering a 10% deduction as well for the services. And the best contact number for you, the one that's above you as well.
Yes, contact, email ID, contact, and my website, everything you can see. Even through website also you can do it.
Taking a picture of that as well. So I have that for me. And I thank you so much. This has been very helpful. Is there any other one piece of advice that you want to leave us with today?
So definitely, because right now this is a tax filing time, I recommend everyone to review your tax returns, just rather blindly following an accountant or CPA and filing the taxes. Ensure that if you have not yet filed your taxes, whatever points we discussed today, ensure that the recording can be watched on our Facebook page also, Tara, as Tara mentioned. So ensure that all those expenses are claimed properly. Then if you are feeling a pain in your heart when you are paying taxes, don't repeat the same again for the next year. Every year, I know, every year, March and April, when we pay taxes, we have a lot of pain. We put so much of time, effort, we do a lot of sacrifices to make $1, to earn $1, but we are paying 30-40% as a taxes. Rather, be proactive, not reactive. Be proactive, start working on tax planning from the beginning of the year. At least start planning from this year, so that you don't need to cry or feel bad, at least for the next year onwards. Unless you do the change, your results will not be changed. I know many people, many of us, we think about taxes only at the end of the year. That is not the right way. Otherwise, if you are expecting a better results, you should do some changes. If you don't do the changes, again, every year, March and April, you have a lot of pain in paying taxes. Rather, be proactive, work with the right person, and you are not expected to know everything. Even I don't know everything about the real estate. So we need to work as a team. Your success depends on with whom you work. It's a very, very important. So you need to identify the right people to work with you, who can think for you, who can help you, who can help you to grow. So that's where it is. So start working on planning from now onwards. Immediately after filing our taxes, let's start planning on for the 2023, and let's do something good. That money, whatever money you save, 20-30%, use it for your to build your vacation house, maybe for your kids' education, maybe for a better retirement planning. Why do you need to donate to someone? Rather, IRS itself says, I want to give one example and close this. And in one of the recent elections, even one of the reporters asked Donald Trump, in 2017, it happened. Hey, we are paying so hundreds of thousands of dollars as taxes, but you are not paying a lot of taxes. What happened? Why? Then what Trump answered, I'm not supporting any party here. I'm supporting him as a business owner here. So what his answer is, Tax Act is the same for everyone. It's for me, for you, it is the same. I know how to optimize it. I know how to use it. You don't know how to use it. That's all. So the same way. So what I'm trying to say is, let's focus on optimization rather than just paying 30 or 40% in taxes every year. Come on, let's start planning, start saving money. Thank you.
And that would be the definition of insanity, is doing the same thing over and over again, expecting different results. So take AG's advice and make sure you guys reach out to him and take advantage of that 10% for being part of LabCoatAgents. And I will be calling you because I think I may have somebody for you as well.
Excellent. Sure, definitely.
Very much appreciate you. And we will.
And if anyone wants to know more about me, who is this Anil? Just very simple. Even you don't save the number, go Google search my name. You will find a few thousands of pages about me, my achievements, my awards, my webinars, seminars. I am very, very well known, and we have licenses to do the businesses in all states of America. And thank you very much for this opportunity, Tara.
You are amazing. We will see you soon. Thank you.
Thank you. Bye.